What's up guys, it's Raymond with another video, and we're going to be doing our seventh video in the German energy sector financial statement analyses. And in this video, if you're new to my financial statement analysis videos, what we do is we analyze the top 3 financial statements of a company, that being the income statement, the balance sheet, and the cash flow statement. And we look at key indicators of financial prosperity and health, and we try to determine the future viability, not accurately, but to the best of our ability, of a company, and also the financial strength and the viability of a potential investment of a company. So without further ado, let's get into the key ratios of the German energy company Uniper. So the market cap is currently at 3.97 billion euros. Earnings per share of the last financial year was 11.04 euros, which means it made a negative profit. The revenue figure was 163 billion euros, which is probably the largest disparity between the market cap and revenue figures I've ever seen, which probably means the company's stock price devalued quite significantly in the last financial year, or the last financial years. Let's just check. 65%, which is of course what we predicted. The beta is 9% over the market average of 1. Beta is just the risk level and volatility of a company, or rather of the stock. The dividend yield is just under 1, which is 0.64%, which is not great considering that the market cap, or rather price growth, hasn't been stellar. Let's look at the first financial statement of the 3, the income statement. As you can see, over the past 3 financial years, the company hasn't made a profit. In fact, in the last financial year, it made a negative profit. That in and of itself can cancel out a stock as a viable investment. But let's see if it's managed to redeem itself in the balance sheet or in the cash flow statement. The balance sheet suggests the company is incredibly over leveraged. So it's almost around 80% debt to asset ratio in the past 2 financial years prior to the last. And in the last financial year, it increased its debt to almost over 90%. Coupled with the poor earnings of the company, I would definitely say that eliminates the company from being a viable investment. Let's look at the cash flow statement to see if anything has managed to improve the company situation, and also to see how the company manages its cash. So the starting line of the last financial year was 4.11 billion euros. The net change in cash was 2.68 billion euros. The prior financial year, the company started off at 402 million euros and ended with negative 583 million euros. And the prior financial year, the company started off with 644 million euros and ended with a negative 312 million euros. Let's look back at the 2021 financial year, and also to add, having a negative net change in cash or a positive net change in cash doesn't necessarily determine the financial strength of a company. It just determines how the company manages its cash. And if the company has a negative net change in cash, it may just mean the company has just invested some cash into eliminating debt or purchasing capital and equipment. So let's look back at the story of the cash flow statement to see how the company manages its cash. So the starting line is 4.11 billion euros negative, and there's 3 main aspects of the cash flow statement that we need to look at. The first being the cash from operating activities. So the company started off with 3.62 billion euros from operating cash flow, and it ended up with a negative 7.52 billion euros. So how did that happen? The main figures that have caused that to happen is deferred taxes, which is taken away 1.05 billion euros. Changes in working capital, which is taken 4.73 billion euros. Non-cash items, which is taken 2.74 billion euros. and depreciation, which is taken 1.31 billion euros. So the starting line from the cash from investing activities suggests that the capital expenditures was 708 million euros, and the cash flow from other investment activities were 6.81 billion euros negative. So both are negative figures. What does that mean, especially from cash flow from investing activities? It means the company lost 6.181 billion euros from investing activities. And if we couple that with the prior financial years to see if the company lost any money on investing activities, the company lost 403 million euros from investing cash flow in the 2020 financial year, and gained 875 million euros in the 2019 financial year. So if you add all of that up together, carry over 400 million roughly, the company gained roughly negative 6.4 billion euros in the past 3 financial years. What does that say for a company as a investor? It simply means that Uniper as an investor isn't very good. So let's get to the last aspect of the cash flow statement, the cash flow from financing activities. So the dividends paid in the 2021 financial year were 539 million euros. The issuance of stock, 7 million euros. And the retirement of debt was 7.11 billion euros. So the foreign exchange effects, 14 million euros, which is quite trivial. So the net change in cash ended up as 2.68 billion euros. I want to thank you guys for watching this video, and I hope to see you in the next one.